Could the upcoming Super Bowl actually forecast? Could it predict what's going to happen to the stock market? It might be able to. I'll explain coming up. My name is Mike Bernard. I'm the host of the Wise Money Show. I'm also one of the certified financial planners right here at Korhorn Financial Group. Make sure you hit that subscribe button, turn on notifications, and smash that thumbs up button. All right, let's talk Super Bowl and finances. Okay, well, let me first tell you. So Mattress Mac came out and set another record for the biggest wager on a Super Bowl game, on a game, $4.5 million that the Bengals are going to win this upcoming weekend. That is crazy. Not with my money. I know it's advertising, but wow, that's a lot of money. I think the payout is huge as well since the Bengals are underdogs. Interesting. Looking forward to the game. I hope you are too. That's gambling. I want to talk about the market, okay? Does the Super Bowl actually can it predict, can it foretell where the market's going to go? Of course not, right? No, there is actually such a thing called the Super Bowl indicator. And get this, guys, 74% accuracy. 74% accuracy. A few years ago, looking at it, it had a 90% confidence rate, 90% accurate. That's incredible, guys. Check this out. All right, so the Super Bowl indicator, that is a thing, okay? And it's, like I said, pretty accurate. Now, correlation does not equal causation, okay? So obviously this is non-financial. I don't know, it's so strong that maybe there's some self-fulfilling prophecy. No way. The financial markets are way too complicated. There's no causation here, but it is so interesting. So the big idea with the Super Bowl indicator is that if the team from the AFC wins, that is negative for the market. That is sort of foretells that over the upcoming year, the market's going to be down. It's going to be declining. It's going to be negative, a negative return over that upcoming year. Now, if a team from the NFC wins, that's optimistic for the market, or at least that's what the data suggests. The market tends to do well for the upcoming year. Now, to me, that suggests that an NFC team must win more frequently since most years in the market are positive, but 74% accurate, that's incredible. So a couple of interesting things to note here. Obviously, the Steelers have won the Super Bowl many, many times, okay? Shout out to you, Nate, who is a huge fan of the Steelers. They're not winning it this year, though, bud, sorry. And but anyway, so a little caveat here is that actually the Steelers are categorized as an NFC team because that's how they started, even though every time they won the Super Bowl, they were an AFC team. So that's sort of clouding these numbers a little bit. The other thing that I would tell you is probably the biggest blunder in this study is 2008. Now, you might remember 2008 to be one of the best Super Bowls ever. Okay, this was the helmet catch. This was the perfect season for the Patriots that was kind of destroyed with one of the greatest upsets ever by Eli Manning and the Giants. Now, with the NFC team winning that Super Bowl, you would have said, okay, well, gosh, the upcoming year. I mean, sitting there in February of 2008, you might have said, gosh, it's been a little rocky, but hey, this is great. If you knew about this indicator, this is great. It's fine. The market should turn around. And of course, that was the year we had the greatest decline in the stock market since the Great Depression between 2008 and very beginning of 2009. So obviously huge blunder there, but pretty incredible that, what is this, 40 out of 54 times this indicator has been accurate. So 74%, that's fantastic. But here's the big point, guys, and this is just pure coincidence. What also has a 74% chance of happening? The stock market being positive in any year, okay? And you guys know, if you're a fan of the Wise Money videos, that, I'm not always optimistic. I'm certainly not always pessimistic. And right now we've got some conflicting data here suggesting where the market is at in relation to the economy. So there's some caution, some cautious optimism here at KFG. But guys, on average, the stock market does well. On average, the stock market goes up if 74% of all years are positive. Now, interesting fact, for those of you that like looking at your finances every single day, about 49% of all days are negative, somewhere in the 48, 49%. So I would tell you, don't look at your investments every single day. If when they're up, you're happy, and when they're down, you're sad, because it's going to be a coin flip. But 74% of years are positive in the stock market. Therefore, you should be a long-term investor, okay? So wherever this news hits you, if that means you need to, stop being so pessimistic and start saving again aggressively for your financial future, great. If it means that you should reset your overall risk tolerance, make sure you rebalance your investments because right now things could be a little high, a little overheated, absolutely, I'd encourage you to do that as well. Work with a certified financial planner. Make sure that you're making your financial decisions in the context of a overall financial plan, looking at all 6 areas of your financial life. That's the job of your CFP. So if you don't have a CFP on your team, one on my team is happy to help you. You can find us online, Korhorn.com. That's Korhorn with a K, wisemoneyshow.com. You can find us there as well, or give us a call, 574-247-5898. All right, there you have it. Go out and take your next wise step in your financial life.